the main thing for me would be how to take positions at those levels.
Okay.
And I've been focusing a lot on indices, so
All right, give me any indices. USD.
Actually, let's do even. Let's do SPX.
SPX.
Yeah.
All right, cool. So that's the S&P 500.
S&P 500, yeah.
All right, cool. So we can do the S&P 500. Just let me know if you can see my chart, and we'll take it from here.
Okay.
Yeah, all right, let me ask Kevin. So Kevin, what about you? Are you okay plotting the levels? Do you know how to pick these levels out?
Yeah, I do know how to, plot psychological levels. It's only the trend lines that are kind of like tricky, how to just like draw, accurate, trend lines for me.
All right, cool. All right, nice. So let's see, we can look at that, and then Kea, we'll come back to the setups that you're looking at. But then let me take this again from another point, from Kevin's point, and then we'll come now to maybe the setups, because for you to understand the setup. So let's say you're looking at this pair and you're looking for an entry around here. So you're looking for a setup around an area like this. But for you to get a setup here, you need to understand what price has been doing. So this is like the basic thing I always tell people. If you're trying to get a sell around this point to take prices to the downside, you can't just look at what's happening here and make a decision. You need to understand what's been happening before. So it's like a build up to this point, or a build up to your entry. So you need to see those things happening. So let me take it one step. Let's take you guys one step behind, and I'll start with Kevin's question. So this is SPX, Kevin, and let's start by putting the psychological levels real quick, and then we'll do the trend line just so we have something to work with. So on this chart, I'm going to use 3335. Okay, I'm going to put this first one. So normally you just hide this thing because I don't want to see these things, and it always disturbs me. That's the easiest way for me. So I'm going to do 3000 on this one. I think 3000. I'll see where this falls. And this is, I think XPX is something I play with all the time. So it's almost easier for me to know what I'm looking at. 35. This is on the 8-hour time frame. Okay. 335. Let's see the next one. I'll put 2000. Let's see where this falls. So I have 2000, then I'll do 4000. Let's see. Okay, so 2, 3, 4. I'll see. Let's go back on the daily real quick. Okay, so if I have levels like this on the daily, this is like just my starting point. So first thing, I'll just plot these levels real quick and just see like the distance, and you can tell because we're dealing with prices here. So it's not so much about where price is interacting from, it's more about the price itself. It's more about that round number, like 2000, 3000, 4000. That's the main thing. So once you do something like this, you can always drop the chart again and you see these things just playing out. So you don't have to keep going back and forth, you see. So that was 4000. I'll do the next one, maybe 5000. You see? So if I have 5000 here, and then I'll just have, let's say, 6000. So those are the levels I'll be looking at. So I can take this one off just to make it clean. All right, so something like this, yeah?
Yeah.
Okay, so something like this. This is what I'll look at, basically.
Yeah.
So if you're looking for a setup around here, let's say you're looking for the setup around here, let's say you're planning to buy or you're planning to sell, you need to understand what is in control. You need to understand the trend you're working with, and you need to understand if there's a possibility for this to even sell to the downside, or we might cap at this area and just keep moving to the upside. Yeah, so it's very important for you to look at it like from all angles, and that's why I bring in the concept of the trend lines. Because if you're going off of psychological levels, if you're going off of psychological levels, and I have this chart like this, so it's quite easy for you to say the next level price might get to is 7000.
Yeah.
Right? Just going off of this, it's very easy to say the next level will get into 7000, and I clean this. Just keep 4 levels on the chart. So if price goes from here to here and it doesn't come back to this area, just common sense, like nobody has to tell you like this thing has a potential then to move all the way to this area. It's just common sense. So now you're looking at this entire move to the upside, which becomes now very easy. But then let's put trend lines and see, because if something is violating a trend line, and then it means those guys are no longer moving in that direction, so you might get a reversal. So how do I do the trend line thing? So this is where the concept thing comes again. When doing trend lines, I pay attention to the time frame I'm looking at, I pay attention to the swing move, and I pay attention to the pivot point. These three things, like this has helped me a lot. So a lot, just these three things. So let's clean this. Let's put now a trend line on this time frame. So this is the daily time frame. This is the highest time frame I'll be looking at, right? So let's get something like this. If you drop this here, I'm going to make it visible for you as well. So let's put this. Can you see the trend line?
Yeah.
All right, cool. So we have this trend line right here. So here's the difficulty with most people. When you have a chart like this on the S&P 500 in terms of trend line, so Kevin, you pay attention to this. This is where people get confused. So let me make this line thicker just so you're looking, make it like really dark. Cool. Is it visible now? Yeah. So here's the difficulty with trend lines. Most people look at this. So you might draw something like this, correct? And say this is the trend line you're looking on the daily. So when you get a violation of this trend line on the daily, they start looking at something like this. So they might put a trend line here. They might put a trend line here. And you might see a trend line here. You might see a trend line here. You might see a trend line here, like this. And this also is a trend line. So the question is, what's the trend line you're looking at? Because you see trends everywhere, but you need to have a principle on how to draw your trend lines to remove any doubt, any confusion, and anything that's going to make you confused, you need to take it off. I'll show you one little trick. So the time frame you're looking at is very important. So we'll start currently on the daily time frame. Once you get the first trend line on your highest time frame, so that could be your daily time frame, now that becomes like your master trend or the bigger trend you're looking at. You can take now this trend line and then you move to other time frames. Now once you move to other time frames, this is where you start switching the trend line thing, because a violation on one time frame is going to revert back to the next one. So let's take out these trend lines that you have here. So I take out these trend lines. Let me see. I'll take this out. So let's take this out. This is a wrong way for you to draw the trend lines as per my approach. So according to another person, this might be the best way to draw it. So how does price move basically? So when price is moving, there's three ways price moves. So you normally have like a consolidation thing. And then you have price making higher highs and higher lows, which is an uptrend. And you have price making lower lows and lower highs, which is a downtrend. This is the basic principle of how price moves. I don't care what nobody tells me. This is how price moves. You can combine certain concepts. You can bring certain concepts together. It's never going to change how price moves. So price moves this way. Now, once price moves like this, it means if you're having an uptrend, within this uptrend, you can see price doing some kind of a consolidation and then a continuation again to the upside. And if you're having a downtrend, you could see price doing a consolidation and you still see price moving to the downside. So this consolidation doesn't mean the uptrend has completed. Again, pay attention to this. The consolidation doesn't mean the uptrend has completed. If price is moving to the upside, a breach of a trend line doesn't mean the uptrend has completed. So a violation of that trend line doesn't mean it has completed, because price can do something like this, which is a pullback, and you see price resuming its move again to the upside. So you have to put all these things together to understand the trend you're looking at. So looking at this on the daily on this time frame, when you see price moving like this, and you get the violation thing and get a pullback, the time frame is very important. This entire move right here is not your trend line on the daily time frame. What you're seeing right here is just a swing move. It's a swing. It's like these guys took prices from here, and there's a concept I always explain to people as well. It's called the concept of the big boys, like what the big boys are trying to do. So these guys, or the institutions, banks, or whatsoever, they took prices from here to here, and you can see it because there's an intention with this move. It's a massive move to the upside. You see, continuous buys to the upside, and after that you had this slow push to the downside. So when you're looking at this in terms of price structure, what you have is a move to the upside, you have a pullback, and you have a continuation. So everything you're seeing here is just a swing move.
Yeah.
You see? So if everything you see here is a swing move, and then here's your origin, it means if you're doing the trend line thing, you're connecting this area and this area for you to continue to move to the upside. So what you see here as well is a swing move. So you at some point you're expecting a pullback again and for price to take off.
Can I?
Is it making sense?
Yeah.
Okay. So
can I just? Oh, okay.
Yeah, Key, ask this question. Yeah.
No. So I was just saying that when because I've been practicing this for a few weeks, even like maybe a few months, and to be honest, like it's really changed the way I think about how price moves, because and it's something that I keep on seeing. It's either price will go up, will retrace, go back, or if it doesn't do that, then I wait for it, or I either move sideways, and then if it moves sideways, then I know that okay, at the end of this consolidation, then something is going to happen. But I'm obviously expecting for it to continue up, based on a trend, something like that.
Yeah. It's a very important concept, and I think most people probably miss it once they see the valuation coming on a higher time frame, because everybody thinks at this point price is about to sell, so everybody gets ready to start selling, and they're looking at this as a new trend. So you see people saying this is a downtrend, which is correct, but it's a temporary downtrend within an overall move to the upside. So if you look at it from the bigger time frame and you understand the swing, then it becomes very easy for you to capitalize on this move. So this is what I'm looking at, and most importantly, because I'm a swing trader, so I'm trying to capitalize on the swings. So maybe for a scalper, for somebody who is scalping on lower time frames, this might be okay for you. This move right here might be okay for you, and you might take something like this and kill the market. But personally, for me, I'm a swing trader, so I can trade this retracement coming down, but I understand what I'm doing, and then later on I'm looking for the swing again. And with the swing moves, I'm not just trying to get in here and take it all the way to the upside. Sometimes it takes time for me to understand this pullback coming in, and then I'm gonna join this guy. It's another concept thing I'll explain. Maybe we'll do it during another session thing. So let's continue with this. So now you understand how these guys are moving. Now you understand what they're trying to do. And so when you understand this, you're paying attention again to the time frame. Hold on. So you're paying attention to the time frame, you're paying attention to the swing move, and you're paying attention to the pivot point. So we've done the time frame already because we're looking at the daily time frame currently. The first thing, we've seen the swing move, so we've identified the swing move. So what everybody sees as a move to the upside and a break and a new trend forming to the downside, what we're saying is that is not how you should look at it. What we're saying is you have your time frame, the daily, we've seen this time frame, we've identified this move right here as a swing move. Once you identify the swing move, now this is where it becomes difficult. How do you get the pivot point? Because when you set the pivot point one time, let me show you something. So let's say you're looking at this on the daily time frame, and price makes a move like this to the upside, and then it pulls back and it makes another move like this. Once you identify the pivot point, like the first pivot point, so let's say this is your origin for the move, and price gives you a swing move and it pulls back. Once you identify the pivot point, price tends to respect that pivot point over time. It's just so price eventually is going to pull back to your pivot point, which is like the trend line thing, and then it takes off again. So how do you identify the pivot point to give you this trend line? That's where it becomes really complex. That's where it becomes complex. So I'm going to show you something real simple right here. So you're looking at this move right here. As price comes down, so you see the sellers coming in, right? So sellers are coming in, they're trying to do everything possible to take prices to the downside, but you see this inability around here. So you're watching this, it's like the build up to something that's going to happen, and this happens in different shapes and forms. So you might have a simple one that just comes back like this, and you might have one that consolidates. I like the consolidation one like crazy, because most people sit away, like most people, they walk away when prices consolidate. And trust me, if you master the consolidations, you might be sitting on something really serious right here. So as price comes down, right? So let's just say you're seeing the sellers coming in. Sellers are coming in, and then they get to a point like this. They try this attempt to make the buys, and then they fail, right? You still see prices coming down. This guy still try to buy, so you keep seeing this fail. Like they're trying so hard to buy, and then they're failing. But at one point, you get those buys, you get a pullback, and that price takes off. That's your pivot point right there. That sweet spot where they took over those buys, that's where you should be putting your trend line. So
another way I understand it is, I always try to also check where did they break
the structure.
Yes, so basically take out a high. So
I'll show you one thing about that. I'll show you one thing about the structure being broken. So it's so you look at this high right here, right? This is the high, right? There's a possibility, I've seen this many times, price can break this high and come back down and still not take out this area, and it's still gonna struggle to buy and maybe fail, right, before even taking off. It has a possibility to do something like that. So personally, when I'm doing it, this is what I do. When I'm doing it, so with the concepts I do, I try to limit the number of things I'm looking at, or the number of things I need to align for me to take positions or to make a decision. So basically, I know there's a swing move. This is easy.
Yes.
I know there's a swing move. I know price is coming to the downside. And this is something I just like looking at the charts and discussing, like I'm connecting with the charts. And I see sellers coming in, I see this inability. I see this initial buy attempt. So I saw buyers coming in here. This was a buy attempt, it failed. Buyers came in here, buy attempt, it failed. Buyers came in again, buy. So you keep seeing this failure up until this point here. So the first one is the most important one, because when this is happening, you might be trying to do certain things, because within this area there's a change of structure, there's a change of character and all those things. But if you're going off of those things, you might miss it, or you might keep trying and failing. So you try and fail. So this has to happen. So you need to see the swing move, the pullback, everything, consolidation, difficulty. And once price takes off, once you have your first pivot point set, that's the most important thing. Once you have the first one set, that's all. That's where your true trend comes from. So that's where your true trend comes from. So everything now that you're looking at, you're just waiting for prices to come back to this area. Once price pulls back to this trend line, now this trend line is not just a trend line. Price is pulling back, so you can have another pivot point, and for prices to go again to the upside.
Or it could consolidate sideways.
It can consolidate sideways, and so at that point, I don't care how it comes to this pivot point. So the price can do something like this and start consolidating. This is even like, this is sweet. Like, this is the one I'm waiting for. I like this one.
Yes.
Because during this period, nobody pays attention. So when it starts popping out, nobody even pays attention. So people see this price around an area like this. But the juice and the sweet thing is within this consolidation. And you can actually sell, buy while waiting for this to explode. It's going to take time, but you can understand this thing and piece it together. So here, listen again. So look at this schematic right here. Look at what I'm showing you. So once you have the pivot point set, you have the pivot price always comes back to that pivot point, right?
Yeah.
So if this is on your daily time frame, so this again for Kevin, you was like really struggling with the trend line thing. When price comes back to the pivot point or to the trend line, as price takes off on the daily time frame from here and makes a move like this to the upside, this is a swing move on the daily time frame. This is a swing move on the daily time frame. But when you step down to the 8-hour time frame, this move is not just a swing move on the 8-hour time frame. This on the 8-hour time frame is a trend line. So you have your daily trend line, you have your swing move, pull back, pivot point, price takes off. When price takes off from the daily time frame to here, price gives you a swing move on the daily time frame. This move on the lower time frame is a trend.
Yeah.
So how then do you, so when you step down, so Makia, this is what I was telling you, when it comes to the trend lines, when I step down with time frames, so as you're leaving from here and you're stepping down to the 8-hour time frame, this is what you're paying attention to, this move right here.
Yeah.
So that's a trend now you're looking at. And the reason you play it this way is because when you get a violation of this swing move on the daily time frame, which is a trend line on another time frame, all you're doing is selling back to this daily area, or you're consolidating to this daily guy right here, so you can buy again. Or you get a violation and then you start seeing sales, and then once you violate on the daily, it's going to deliver something else to the weekly. If the weekly fails, it will deliver to the monthly. If the monthly fails, it will deliver to the 3 months and then 6 months, or maybe the yearly and stuff like that. But you need to pick something that's easy, and then you start working your way top to bottom. So let's say we have our trend line on this time frame. So I'm going to clean this. So now you see, it's very easy. You have your swing move, you have price pulling back. So all of this noise right here is just a consolidation thing, but your pivot point is set, price takes off from the pivot point. Now you have a swing move on the daily. This swing move on the daily now gives you the next move on the lower time frame, say the 8-hour time frame. So we're looking at this on the daily time frame. See what we've done. We've had our psychological levels plotted. We have, you see how beautiful it is, you see how clean it is. We have our swing move we've identified, we have our pivot point. So on the daily time frame, there's nothing we can do on the daily time frame like currently. You can't do anything on the daily, because if you're trying to buy from the daily, you need to wait for prices to consolidate or prices to pull back. Once price gets to an area like this, now you get interested in a pair like this, and then you take those buys, or you look for the setup around those areas, and then you take those buys. So before we continue, everybody was trading the S&P, trading NAS, and trading all those things. So when you look at a move like this, you can tell already maybe 3 years before time, 4 years before time. And I keep saying this thing when I'm doing the market focus. The S&P, NAS, and US 30, these things are going to crash. And I'm not saying it because I'm a market mover. I'm not saying it because I'm moving the market. I'm just saying it going off of technicals. It's how price moves. At one point in time, this thing is going to crash, and everybody is going to be sat there saying, oh, the S&P has dropped by maybe this percent, and but it's simple. You can see these things happening before it even happens. Put this trend line this way, walk away on the daily time frame. Just walk away, don't touch it. Keep it this way as a reference point. Stay with this on the daily time frame. Don't touch it, just keep it this way. At one point in time, you will see price coming back to this area. It's just the way price moves. Like I cannot control it. Nobody controls it. All right, so we have this trend line right here. I'm gonna keep this trend line on the daily time frame. So let's make sure it's visible only on the daily, right? So we have our trend line on the daily. So how do you move now to the 8-hour time frame? And for those who don't have like the 8-hour time frame, and let's say you have the 4 hours, I'll show you how I do it to the 8-hour time frame, because I have the paid version thing. So you're looking at it from this point where you have your pivot point and price is taking off with a swing move on the daily. That gives you the trend on the 8-hour time frame. So this piece right here, is what you're looking at on the 8-hour time frame, like this. Correct? So I'm going to put this trend line visible just on the 8-hour time frame. I just want to see it on the 8-hour time frame. That's it. Let's see, take it off the daily. So now I can step down to the 8-hour time frame, and so you see I have something to work with on the 8-hour time frame, correct?
Yeah.
And that's
Yeah.
it. So I can put this like this. Yeah. So when I'm drawing the trend line, I'm not paying attention to the wicks or the body. No, price is just moving to the upside. I just want to see the pivot point where price takes off from. You see. So I don't care if it goes on the body. And when I show people this thing, I'm like, you can draw this trend line to cut across the body of this candle. It doesn't really matter like that. And I'll put it this way. It's just a reference thing for you to see. So I don't have to put this trend line at the bottom right here. I don't have to, because it takes away the concept of the pivot point. Because on this time frame, on this 8-hour time frame, this area is not the pivot point. Because if this was the pivot point, it was supposed to break this high and take off. So Kea, you see what I was telling you? So it was supposed to take out this high and take out this area and start moving to the upside, but it didn't do it. So it took out this area, but it struggled. So once you had that struggle and that difficulty, then price took off. So you see, price took off from here. Now that's a swing move on the 8-hour time frame. You see, so I can't be paying attention to this because he didn't do the work. So this guy did the work. So that's my pivot point. So on the 8-hour time frame, I've been able to set that out already, and it makes it easy for me. So you can do the same thing on the 4-hour time frame. If you're stepping now to the 4-hour time frame, this is your move right here on the 4-hour time frame, something like this. That's simple, right? On the 4-hour time frame. So you can take this off again on the 8-hour and just say I want to see this on the 4-hour, and that's it. So when you step down to the 4-hour time frame, you start playing with something like this.
But you see, Claudio, a question is now. It seems as if there's an importance of having the 8-hour time frame, because if you're only using daily, 4-hour, and hourly, then you kind of like obviously miss.
You miss something. I'm going to show you what you can do in a situation like that. So let's say you have the daily time frame, right? So let's say you have the daily time frame and you don't have the 8-hour time frame, right? So I'm going to show you how you can spot this on the 8-hour time frame if you don't have the 8-hour time frame. So look at this. I'm going to put this back on the daily. So let's say you don't have the 8-hour time frame. So this is on my daily time frame. I don't have the 8-hour time frame, correct? But I know already this is my swing move on the daily, which is a trend on the 8-hour time frame, and I can spot that pivot point on the 8-hour time frame even without stepping down to the 8-hour time frame. So it's easy for me just looking at this on the daily time frame to tell you that this area right here is what's happening on the 4-hour time frame without going there. So if I take this one off, I'm not seeing this on the daily, yeah? And I'm able to then come out with what's happening on the 4-hour time frame. So I can step back to the 4-hour time frame and I have my move on the 4-hour time frame. Like this. So you don't have to pay for the subscription thing on the just to get here, but you can already, it's just a simple thing, it's a simple tweak thing that you can do, and that's it. So now you sat here and you have these trend lines like this, and it becomes now very easy. Like this, it becomes very easy. I don't know if you guys watched one of the market focus. You remember when this move was taken off, this move right here, and I said it during one of the focus thing. I was biting my fingers. I was pissed off. Why? Because I had an entry around here. I had an entry around here.
I did watch market focus.
I think I remember in that instance the trend line was like just above.
There was a trend line thing around here, and I think I was looking at that trend line, I think on the hourly time frame or something like that. But because I have like the trend line and the side level concept thing I'm trading, I was seeing something else at the time. So I was seeing, so there's also a principal trade. So you know, if price is moving to the upside and you connect a trend line, you know it's possible for you to see when this trend line gets violated. That's a very advanced thing I've been looking at recently, and I've been studying and back testing as well. So there's a setup I'm actually taking now, I'm actually practicing on, that actually breaks the trend line. So that's a whole different thing. So normally we're focusing on buying when price comes to the trend line, buying when price comes to the trend line. but I'm looking at possibilities where you can break the trend line. So when the trend line is getting violated, there's a setup I'm looking at that violates that trend line thing. So it's one of them setups I was trying to take around here. So I was trying to sell to break this area down so I can get to, I think I was trying to sell to take it all the way to like the 8-hour time frame, or maybe, yeah, something like that. It's been a couple of weeks already and it didn't go. And then it took me out, and that was fine. But you remember, again, I took this bias from here all the way here and I closed it. So you can do lots on this. You can do lots. Just understand it and see how easy this thing is, but see how clean the chart is. Don't make it complex. And this is something like, there's lots of people that's going to tell you out there the trend line doesn't work and the psych levels don't work and things like that. At some point you need to cover your ears to what people are telling you and ask yourself, what works for you, what makes sense to you, what concepts are you comfy with. So the trend lines on this thing, trend lines have been in existence since 1948. There's a book that's written on technicals and all these things. I didn't come up with something like this. So people have been looking at this thing for a long time. So when you're looking for concepts, you need to go with something that has stood the test of time. Price is going to move like this. This is how price moves. It makes a move up, it comes down, it makes a move, comes down. And everybody preaches this thing, higher highs, higher lows. Origin, you have a high, you have a low, higher high, higher low. So everybody says these things. So you have a higher high here, and you probably have a higher low for us to continue to move again to the upside. So everybody says price is making higher highs and higher lows, but then to interpret price within these higher highs and higher lows, that's where it gets difficult. That's where everybody starts getting confused. And so, but it's just the basic way for price to move. Now you need to understand the structures within this movement. That's where it becomes difficult. So now that you've established this, now you can use two principles. So if you're trying to get the direction of where price is most likely going to go to, this is how simple I'm looking at it right now. So I'm looking at the move like this, going off of the principle of psychological levels. If price goes through one level and it finds it difficult to come back and trade below this area, then it's most likely going to do its thing, test, and move again to the upside. So you're looking at this right now. Price has the possibility to come back to the 6,000 level and test it. And price is not only coming back to test the 6,000 level, price is also going to look for this pivot point on this trend line. Is it making sense? So you have the pivot point set and stuff like this. So price is going to come back to this pivot point. There's a possibility you might get a spike to even test this psychological level, and you see price coming back up, and that's it. It's going to take off from there and move again to the upside. So these are all possibilities. These are all possibilities. So once you have this, once you have this directional thing set up, and you're just using two basic principles, psychological levels and trend lines, then it becomes easy for you to sit on your hands and wait for prices to come back to those areas. Then you can come back to Kea's question, like the setup thing that you're looking for. That's a whole different thing. That's a whole different thing. Yeah.
Okay.
Sunday, do a thumbs up. Are you following? I know you're in a tight spot. Sunday, just do a thumbs up. Let me see if you're following. Yeah, I think he's following. But Kea and Kevin, does it make sense now? All right, cool, Kevin. I'm a cool Sunday. Yeah, cool.
Like I'm saying, I've been practicing for quite a while now.
Yeah.
Just trying to get my, but it's I'm grasping it quite well.
Yeah.
Like I said, yeah. I think the only thing for me is just the setups.
It's a setup. So I know everybody wants the setup. Like, what's the setup that you're looking for? Like, I had somebody text me and say, "All right, can you show me the entry thing?" I'm like, "Just hold on. You need to understand how the price is moving before you're looking at the entry. You're looking at the setup.
Yeah.
That is gonna come over time, but you need to get comfy. You need to get comfy just looking at price this way and understanding where price is most likely going to go to, how price is going to move, and the areas price is most likely going to pull back to. Once you have this concept set correctly, trust me, you have a 50% chance of succeeding compared to any other person just looking at price this way. So if you do like a toss of a coin thing and just say you're gonna buy when price gets to an area like this, I mean, even without having a setup thing, so let's just say you're buying when price gets to an area like this.
Yeah. Because I already see a setup there.
Yeah. So let's say you buy here, right? And you wait for price to come back. So every time you see price coming back to this area, you're just buying. I'm just basic. Every time price comes here, you just buy. So price gets to an area like this, you buy. You have already a 50% chance of succeeding compared to another person who's trying to guess and do stuff like that.
Yeah.
You have a 50% chance of succeeding. But the problem is, how do you spot those entries that's gonna play out correctly, and how do you eliminate the noise when you're seeing this? Because you can't trade everything. You can't trade every pullback to a trend line. So if you're trading every pullback to a trend line, it means you're just identifying the move, and then you're just waiting for prices to pull back and you buy. If you do something like this, over time you're gonna get burned, because you need something that replicates itself over and over again, and that's where the setup thing comes, the entry and all those things, the confirmation. Because you can look at a pattern that happens around the pivot point, and it's going to tell you if this guys who are selling, if they've come to an end, or if they're finding it difficult. Once you see this thing repeating over and over again, then you can buy. So at this point, once you have this concept, you can look for your own criteria at the pivot point. It's easy for me to show you what I'm looking at. It's easy, but you sometimes also need to put in the work and look at it and ask yourself, what happens when price pulls back to this area? So if there's a difficulty, how is price struggling around these areas? And that's something you can do on your own as well. Because me showing you is easy. It's like copy and paste, but you need to tweak these things to suit you. So my entry criteria might be different from yours, but the concept is the same. I've shown you like the principle, like the side level, and I've shown you the trend line. So those are two major principles you can build something from, and you can take it from there one step at a time. We'll come back to the entry thing and stuff like that. But let me ask a few questions. Kevin, do you have any other question thing?
No,
I'm good.
Yeah, that was really good, because I did watch some of the videos, and we only took the entries when the trend lines correspond to the psychological levels. And I was like, this might take months to just like find a setup. And with this, I feel like this is really good, because probably, as you said, if you take like a buy at these trend lines, probably there is a 50% chance of like getting a setup. But like now, because I've done different strategies, because I'm like, probably if maybe we let it like this, as you said, you can twist it your own way to just like get a proper setup for yourself. For me, I personally, in that case, I would like wait for like a change of character right up, and if you can come and retest back to maybe like a 50% Fibonacci level, probably that might tell me that we are over.
That's a confirmation. And again, you have to test it and just see. You have to test it. But I know you want to see my entry technique and stuff. You have to test it. I mean, no. So let me put this out there again. So once you have the basics set like this, it becomes easy for you to play with a lot. Like, it's very easy for you to start playing, because now you understand what's happening. You can take these sales as prices coming down. You can trade within this consolidation. You see this consolidation thing right here? There's actually a setup right there. There's a setup right there. So you can do a lot within this period. So it's just a lot you can do. So here's a take. Practice this first. Understand how the psychological levels are playing. Oh, there's something I wanted to tell you guys. So if I'm taking a buy, let's say if I'm taking a buy around here, notice there's no psychological level thing around here. But I can take those buys around that area. So I'm not just waiting for price to play out. So I'm not putting a psych level here to take now the trade from this area and say, okay, there's a psych level and then there's a trend line. No, the sweetest one, like the one that makes a lot of sense, is when it aligns. So let's say this comes back. Let's say the S&P comes back to an area like this. If it aligns with the trend line and the psych level, it's more confident for me. It just makes it sweeter for me and easy. My decision process, like my thought process at that point is like, I'm not thinking too much at this point because it's easy. You have two major things that are standing there that can help you. So I can take those. So remember, I did the buys here, but there was no trend line thing. And I think at the time, I was looking at other minor trend lines and psych levels. And I think the past 2 weeks thing, I've changed the levels I'm looking at just because price has expanded more and it's giving me something else. I'm looking at something else, like massive moves now. So I think at the time I was looking at this area right here, we're sat around 5,800. At the time I was playing around 5,800, but now I've taken that level out. I'm not even looking at it. So you can trade without these levels here like this and stuff like that. You have your major levels, so you can take those buys here, Kevin. That's just something to pay attention to. You don't have to see a psych level and a trend line to align before you take it. The psych levels is going to tell you if price is rejecting around this area, it's most likely going to go to the next one. Period. The trend line now supports that thesis you have already. It's like the push. All right, if we go into this area, is there a trend line we can play with to move prices to that area? Because what we're trying to do is just taking a piece of what the big boys are trying to do. So if the big boys are trying to move prices from here to here, you might get in around here.
Yeah.
And that's fine. And you might do a 1:3, 1:4. You come out here. So, and then you look at price, look at what's happening. You wait for this to come back, and then you do maybe a 1:2, 1:3. Man, I'll be waiting for this S&P move. Damn. Yeah.
No.
You see, you get the principle thing. Yeah.
I've got a question.
Yeah. Let's get a question.
Okay, so number one, I see that you use one color for your charts.
Yeah.
And then also, are you open to using a channel as well, like a channel? Because I've seen that when you also use a channel, the same way you use a trend line, you're able to anticipate some
The reversals.
Yeah. Or is it because you don't wanna like
Hold on.
over?
So you're saying something like this, right? Something like this? Is it the channel thing you're looking at?
Yeah.
So you're looking at price doing this move and stuff like this. Is that what you're saying?
Yeah.
So this is my thought process thing. So if you notice, I use just one color first of all for all my candlesticks. I think I'm very minimalistic when it comes to the way I look at price, and I don't want to crowd my thought process. At one point, I know the reversal. So if price is moving to the upside, if price is moving to the upside and it's pulling back, I know price is going to pull back, but I have a setup I'm looking at to take this pullback. So I really don't need this thing here to tell me. So I have something. I have my basics, like I have my basic thing I'm looking at already. Oh, sorry, I've gone too far. Just give me 1 minute. So I'm going to clean this. So I have this set already. Yeah, that's it. So this already is too much work, having this trend line here. Because now I'm playing off of my, like, it's a bias thing for me. I'm like, if price comes to this area, I'm going to make this bias. If I have another trend line above this area, it's now more, so it might derail. So this is it. This is the reason why I don't put the trend line above this area. I've seen people do it, but I don't do it, right? So this is my thought process. If price is doing a swing move and it's trying to take out this area right here, this thing can keep shooting to the upside. So I don't want to limit myself here by putting this trend line thing. So I just want to keep it simple, like keep it open, because this thing, it can shoot to the upside and just go. It can consolidate before going. So to make it easy for me, I take it out. So I just keep it open. That's just my thing. I keep it open. And for somebody else, you might decide to put the trend line thing and see what happens. But I have a setup that tells me when this thing is reversing and stuff like that. So I have a setup I'm looking at Once price, so as price is getting here and it's pulling back, there's certain things I'm looking at, and again, basically, I'm more of price action. I like seeing the way it's playing out. If there was a possibility for me to take out this trend line, I'll take it off. Yeah, but at least let me have something as a reference at that point. But for another person, you might put it's still correct. Like, it's not wrong. It's just my personal. It's like my preference thing. I just like one line, and then my psych levels. It makes it clean for me, and it makes it easy. And then, so as this is reversing, there's something I'm looking at. As this is reversing, there's something I'm looking at. So yeah, so I can tell even without putting this other thing here to make the channel thing. I can tell price is going to do that. You can do it, so you can decide and say, okay, to make it easy for me, I'm going to put another trend line here to get the reversal, which it works, man. Like, it works. Just I have something that makes it easy for me, and that's my own way. But you can do it that way, and you put it. And back to your second question, why do I have my candles or like the unique color thing, and I'm not using different colors? So I want you to understand something. Let's take out this thing. Let's take out this chart, and let's take out. Let's keep this. So let's take out this thing. So how does price move, Kea? So when the big boys are trying, so what's a candlestick? When you see a candlestick like this, yeah, when you see a candlestick with a body and a wick, what's the representation of this candlestick? Let's say if this is a bullish candlestick right here, it means price opens here and price closes here. This was the highest point price got to, and this was the lowest point price got to for a bullish candlestick. For a bearish candlestick, for example, you have the body, you have the wick, the open price, the close price, the lowest price got to, the highest point price got to. So this was bullish and this is bearish. So the candlestick is just telling you how price moved, right? Let's agree, it's just how price moved. Now, at the back of your mind, so the banks and these institutions, when they're moving prices, they're not even looking at candlesticks. What they're paying attention to is this thing here, the tick, like the price value. So it's 6,000, it's 6,500, it's 6,200. So if they decide, so let's say the big boys, if they decide to take prices from 6,000 all the way to 6,500, for example, if they decide to move prices from 6,000 to 6,500, these guys don't care if somebody was selling heavily to this price point, because it's a bid and ask thing. It's like a negotiation thing. Once you give me the price I'm looking for, I'm gonna take it, right? So when I started before, I used to look at different colors, like the candlesticks, like different colors, like bullish candle, bearish candle, is like blue, red, and stuff like that. But once I understood everything that's happening on this chart, so as price is moving up and it's coming down, it's just price moving up and price coming down. It's a bid, it's an ask, it's a negotiation thing. And once price gets to the sweet spot, it's going to take off. And that's why I can take a buy if you see sellers coming in aggressively, because it's price. It's not the. So if you're trading with candlestick body and candlestick formations and things like that, you might need the different colors and stuff like that. But I'm looking at price. I'm asking myself within this entire move. So let's look at this move. Let me make this clearer. Let me show you something. So let's say from this origin, the big boys took prices to the upside, and they're moving prices to the upside. They're moving prices. As this price starts coming down and it's doing its thing, consolidation, it's doing all these crazy things, and it gets to the pivot point, the sweet spot and everything. If that is the point where these guys have accepted to buy, it's going to tell you. So once you know from the way price has been moving and price has been consolidating, and you can tell the pivot point is set around that point, you can look at the pivot point as a point or the price where they've accepted to make the buys again, or the discount they've accepted. So the guys who did this move, if they're comfy with this discount right here, with this discounted price, just extrapolate. Remember, you're just playing off of a price value. So you can tell already if they're comfy with this price by studying this movement. to the downside, this difficulty and stuff like that. So why price is moving and price is consolidating, and that's why I keep telling you, when price is consolidating, you can look at it and tell if these guys are finding it difficult to sell, and you can tell if the pullback is coming to an end. You can tell if the sellers are finding it difficult. At that point, you might even see a bearish candle coming back to that price. It's just, it doesn't, like, I don't care at that point. If that's the point where I'm deciding to buy, if that's a price, let me put it this way, if that's a price I'm deciding to buy from, I'm going to take my buys. So I'm going to take my buys regardless of the color of the candlestick. So once I understood that principle, I don't want to look at other colors. I just want to make sure everything is the same color, and I play from there. Because if that is the price I'm looking at, and then I'm going to do my buys.
Okay.
Careless of the color and careless of the strength. So if I don't see the color of the candle, if I cannot tell if it's red or blue or stuff like that, it's not going to influence me to make a decision. And I think it's just a psychological thing. Because now when you see the red candle, you're scared. But if nobody tells you it's red or it's blue, it's black, then you just, you know, like people say kids are very innocent, like they can't tell what is right and what's wrong. So if you come in the market as well and you have this innocent look on price, and you cannot tell if the candle was bullish, bearish and stuff like that, but if you can tell the reaction around this point is a slowdown, the sellers are completing those sells, then the color of the candlestick doesn't really matter. You can take the buy, you can take the sell. So when I'm looking at it, I'm paying attention to this piece right here. I'm paying attention to everything. This is something I show the guys in my Discord thing as well. So what we're trying to do is we're trying to interpret like what's happening during this phase. So why are you not buying here? Why is it wrong for you to buy it there? Or why is it going to be difficult for you to buy from an area like this to take out these highs? Why is it difficult for you to buy from here to take out these highs? Why is it difficult for you to buy from here to take out these highs? And why is it easy for you to buy from here or from here, and then it takes out these highs? So once you understand it, then you can see the slow movement, the difficulty. Now you can say, all right, I'm comfy with this price, and I think they're taking prices away, or they're taking the buys from here. So the color of the candlestick doesn't matter, because now the price is what matters at that point. That's the accepted price, that's the discount. So look at it this way. Somebody did the buys, right? And price is coming down, price is slowing down, it's consolidating, it's doing all these crazy moves and stuff like that. And you see, so as price is coming down, I want you to reason, this is a discount these guys are asking. So I did the buys. So if I did the buys at this point, it means I had the best price possible. As price is coming down, it's giving you a discount. Now, is this the acceptable discount? They tried to buy, nothing. Is this acceptable discount? Tried to buy, nothing. Is this discount good enough? They tried to buy, so they're not taking that discount. You see, so the sellers are giving you discounts again. They keep giving you the discount, they keep giving the discount, but the buyers are not accepting it as well. So at some point, the sellers are going to tell you, when you go to the marketing and you're trying to beat price, you're asking the person, can you take the price lower? Can you take the price lower? Can you take the price lower? Once you agree on the price with that person, you pay and you go. So as these guys are selling and they're taking the prices lower and stuff like that, they'll get to a point where they don't want to take it lower again. They'll stop. They're like, nah, we're good. That's the highest. So we've given you this discount, and that's the max we can give you. At that point, the price has been set and everything is agreed. You pay, and then the move starts again. So what you have to do, when you're trading price action, the way I do, and then I have patterns I'm looking at as well. So I have a pattern I'm using just to see this price being accepted, like that sweet spot, and to buy from. So this is it. So you have to study this. And going back to your question, Kea, before you get the entries, you need to understand there's something I also explained. It's going to be so difficult to put it right now, but this move to the upside can tell you a lot about your entries as well. So in as much as you're waiting for entries around here and stuff like this, you need to understand this move. You need to dissect the move to the upside just to understand there's something. But once you understand the move to the upside and how it operates, then you can take the buys and stuff like that as well. All right, man. So let's keep it simple like this for today.
Okay.
Yeah.
Thank you so much for the session.
Yeah. So I'm gonna stop sharing.
But